Venugopal Garre is with us of Bernstein. Venu, welcome back. Thanks very much for joining us. We spoke pre-budget, not post-budget, but I think now we're speaking post-budget and post the India-US deal. After the EU deal, you wrote that very provocative note, mother of all deals, but for who? What's the view post the US deal? Yeah, go on, and then we'll come back to you. Go on. First thoughts.
Yeah. So firstly, on the in the EU deal versus US deal, I guess there is a bit of a difference, and part of it is because EU deal I felt was not relevant from a point of view of actual impact, because the average tariffs that are broadly applied on India from a point of view of Europe, our exports to the Europe is roughly around 3 to 4% range. While I look at top 15 products that we export to Europe, it's less than 3%, right? There are certain sectors probably are at 9 or 10%, but I didn't really feel that going to zero, 3 to 4% average tariff is a meaningful number. And number two, EU has a lot of FTAs and treaties and other things with different other countries. So what it means is that you're literally competing with a China or a Vietnam or a Bangladesh or any other country. So in that sense, incrementally didn't really seem like a game changer, or I would probably not call it as a mother of all deals by any measure. Now, India-US treaty, I guess we don't know the contours of it, as you know. All of it is just based on some broader social media communication. But the reality is that a 50% tariff on an average going down to 18% is a fairly meaningful change, and it brings us much closer to where ASEAN is in terms of broader trade tariffs. So at least to one extent, you're not being punitive. And more importantly, my broader philosophy has been that it is better to be closer to a developed country, which is a big consumer like a US, so that you don't really get damaged in the medium to long term, and probably also position yourself as a relevant alternative to China as a balancing power in Asia. Look, all of that is more from the long-term perspective, but I would probably still categorize an India-US thing slightly different from India-EU, broadly from that lens.
Got that. Venu, this one thing, right? This $500 billion number, many people are coming back with that. This is much bigger than the size of our bilateral trade. So then we are supposed to buy $500 billion from US? So how is this good news? Now, my pushback is it's just a number. Who's going to count $500 billion 5 years later? And this looks like for the domestic audience for President Trump there. So is that the right way to look at it?
See, these commitments typically tend to be multi-year commitments, right? So it's not like you're going to spending $5 billion.
It's 5 years, but even 5 years, India imports $150 billion of oil every year. Our imports are $41 billion from the US. So 500, even over 5 years, is too big. My point is, it is just a number. I mean, and we've seen what's happened with South Korea and other countries, etc., right?
Right. See, I'll put it in a more simpler perspective. Look, I would not go to this perspective saying that it's just a number and probably nobody's going to count it. As long as Trump is there, he's going to count a lot of things. So what does it mean? It means that, look, if you're assuming your volume of exports to increase to the US, US would also expect the volume that they are selling to India to increase. Right. Now, somewhere down the line, the one single measure to look at is the trade deficit or trade surplus. Right? So the India enjoys a trade surplus over the US, especially in the manufactured goods side. The point is that is a monitorable number, even if volumes increase. So if, for example, our trade surpluses increase with the US, then US will say, hey, what's the advantage of the treaty? You're actually benefiting from that perspective, right? So don't expect trade surpluses to increase materially from an India to US perspective. That's the way to look at it. Absolute volumes go up is a different argument altogether. It'll go up for imports as well, right? It is going to be an even balance treaty, so I don't think this is meant for, this is not like India is being isolated as a China plus one play, or saying that you are the only one and I'm going to basically import a lot from you only, and I'm not going to import from China because I want you to strengthen against China. I don't think this is anywhere, close to that sort of an arrangement.
What are some of these goods that the US, you believe, would be, rushing to sell into India, which it wasn't so far on account of higher tariffs? What could those categories, sectors be, and what could the quantum of that be?
Yeah, so, if you were to just look at the broader things that US would do, of course, it will be broadly things like energy, right? They would want to sell their energy products into India, which is basically crude as well as other energy value chain. That's one pet project. The second thing is, I guess agri side, they would be probably wanting to make some pathways into India from a point of view being able to sell certain things to India. Now, how much of that is a part of treaty we need to see, because I guess India would also resist and not open it up completely. But that's the second area, which is very critical for US. The third thing is, of course, broader electronic products and things we've been anyways importing from the US that will probably continue and go up. Quantum wise, US wants us to import a lot of defense products. Uh, and remember, this is a very critical and a very interesting situation right now, is that when it comes to India's own defense complex, we are pretty much embedded with the Russian value chain. Now, if we are being asked to stop procuring oil from Russia, what will happen if we announce 10 days later that we're going to be buying $5 billion of Russian defense products? So will this treaty hold good at the point of time? So it means that it is not just about oil, in my view. India has to rethink their entire defense arrangements as well. It's a pretty big call that India needs to take. So defense is another area. They would want to push auto and auto components into India. But look, the reality is that I really don't think, pricing wise, it's going to be material enough to really move the needle, because they'll be super premium in terms of pricing. And auto products really need distribution value chains in India, which are not existing for US companies. So I wouldn't really be bothered about that. But bringing down a duty is a great thing, because anyways, they can't sell much into India, right? So these are the broader areas that I would sort of broadly classify.
Yeah, which is what I would imagine as well, because, the things that US definitely wants to send to India are some of its consumer products and some of its consumer brands, along with retail brands as well, and agri products. We don't know whether that's part of the treaty or not, or whether that will ever be part of the treaty or not. But Nigel.
Well, Venu, good morning. Good to see you, Vin. What about the other big event? Budget 2026. We had spoken before that, and I recall you telling us that you wouldn't mind a little bit of a slip on the fiscal deficit. They have stuck to that, actually. They're holding at, the guided path. Capex spend was, I think, as good as what you were working with, and defense spend as well, pretty much in line. You were telling us that defense spend should be that 15-18%, I think, so which has come about. However, the sentiment negative was that increase in STT. Put everything together, how would you rate this budget? The revenue estimates actually are pretty realistic. So your take.
I broadly gave a title calling it as an academic budget. And I didn't want to call it as a bad budget, because my original thinking was that there is very little policy flexibility the government has at this juncture. They need to juggle next year or the year after even wage revision. So there isn't much they can do unless they increase fiscal deficit from 4.4 or keep the fiscal deficit intact, right? So I was at the camp that theoretically government should look at increasing deficit or keeping the deficit. Of course, they cut down the deficit a bit to ensure that bond markets are in shape and currency doesn't get impacted, and people view us, as a bit more careful as a country with respect to debt and things like that, right? So we have followed the script in a pretty nice way. All metrics that you see from an annual perspective, from capex, which is actually 9%, on the previous budget and 12% on the revised budget, or subsidies which are growing, which pretty much could have been contained, but nevertheless they gave some bit to everything, is the way I put it. See, the thing is, a lot of things announced in the budget with respect to tax ops around, let's say, data centers, or things like allocations for semiconductors. These are all, interesting, but pretty long drawn in nature. So don't expect anything to materially transform or impact the economy in the next 12 months or 24 months, right? So allocations also were not there for a lot of these new initiatives. So I'll put those things aside, but it's a slightly more longer term budget in terms of how they want to reshape the economy and sort of give benefits to newer areas. So neutralish, I would probably say, doesn't really impact the economy this year incrementally positively.
Right. Venu, and 28,100 target, right? By the end of this year, calendar year.
Yeah, see, my target doesn't change. I still say neutral on India with the 28,100 target, but the only difference is the market did fall in January, right? So that increased my return expectations without changing the target from 7.5% to something like 11-12%. So the idea for me is that I'm broadly expecting the market to retrace back to 26,000 plus, which is 4-5% return, which is a short-term rebound, which we wrote in a report yesterday post the US trade treaty, and that's basically where we are at this juncture.
Venu, thank you very much for joining us. Great speaking with you. It's a pleasure, and we'll look forward to our next chat. We take a